All right, let's just dive right into this explainer and absolutely shatter a massive wealth illusion. We are constantly led to believe that the ultra-wealthy only make their millions from the stock market or luxury real estate. But honestly, the real secret to generational wealth lies in alternative investments that are hiding right in plain sight.
Think of it like a giant iceberg. The top 1% builds generational wealth using an asset class that most everyday investors have never even heard of. What we actually see on the surface, the 401ks, the common stocks, that's just a tiny fraction of the whole picture. The real wealth is submerged, quietly compounding in the dark.
While the average investor is out there sweating over a modest 7% return on a traditional mutual fund, the ultra-wealthy are playing a completely different game. They're quietly scooping up boring, overlooked assets that yield incredible cash flow. We're talking 20, 30, or even 50% from day one. And today, we're breaking down these exact hidden assets.
Here is the blueprint we'll cover today: physical infrastructure and utilities, digital real estate, energy and mineral rights, intellectual property, and finally, your wealth blueprint.
Let's start with number 1, physical infrastructure and utilities, car washes to ATMs. Look, most people drive past a local car wash or a self-serve laundromat and just assume it's some relic of the past, right? But the wealthy see pure, inflation-proof cash flow. These businesses require minimal staff, have absolutely zero inventory decay because you aren't selling perishable goods, and they boast constant demand regardless of what the broader economy is doing.
Get this, a standard cash-flowing laundromat or an express car wash can actually run on gross margins as high as 40%. Their main operating costs are just water and power. I mean, margins like that are practically unheard of in traditional retail. And here's the absolute best part. You do not need millions to build one of these from scratch. Wealthy buyers use platforms like BizBuySell or LoopNet to find older, retiring owners. Then they simply leverage an SBA 7A loan to buy that stable, cash-flowing business. You can actually get in with just 10% down, allowing the existing profits to essentially pay off your debt.
Now, let's scale it down to micro-utilities. Think about an ATM inside a busy convenience store, a dive bar, or a hotel. Every time someone withdraws cash, they pay a fee. If a single machine handles just 20 transactions a day at $3 each, that is $1,800 a month in pure automated royalties going directly to a private owner, not a big bank.
Since a highly reliable refurbished ATM costs under $2,000 to start, and you literally just sign a contract with a local business owner to place it in a high-traffic spot, this is micro-scale investing with massive, immediate payoff velocity.
Moving on to number 2, digital real estate niche blogs and tools.
Trading heavy physical buildings for sleek home office setups, modern wealth is moving rapidly into digital land. And we aren't talking about speculative crypto here. We're talking about established content blogs, simple Chrome extensions, or handy online calculators. These are assets that generate really consistent advertising and affiliate revenue with virtually zero overhead.
Platforms like Flippa, Empire Flippers, or Quiet Light are total game changers because they let you skip the absolute hardest part, spending years building an audience from scratch. You can bypass all that and directly buy websites already making $500 to $5,000 a month, stepping right into an established stream of cash flow.
By acquiring the asset and just optimizing its monetization a bit, you can instantly pocket an incredible 36% annualized return. A $20,000 investment generating $600 a month achieves exactly that. It is an incredibly efficient way to deploy your capital.
All right, number 3, energy and mineral rights. The old money secret.
So, when you own land in the US, you often don't just own the dirt on top. You own everything beneath it too. Energy companies will pay massive monthly royalties to property owners for the right to extract oil, natural gas, or to build wind turbines on their land. This income is completely passive and backed by massive institutional utility demands. And no, you don't need to go out and buy a massive Texas ranch to participate anymore. Fractional platforms like US Land Grid now allow everyday investors to buy portions of producing mineral deeds for as little as $5,000. You get paid every single time resources are pumped from that specific parcel of land.
Next up, number 4, intellectual property streams, music royalties.
Think about this. Every time your favorite track from 10 years ago plays on Spotify or gets used in a viral TikTok video, someone gets paid a micro fraction of a cent. What's super fascinating here is that music royalties are completely uncorrelated to the stock market. Whether the economy is booming or crashing, people are still streaming music, making this an unshakable hedge against traditional market volatility. Websites like Royalty Exchange have completely democratized this asset class. You can literally go online right now and bid on fractional percentages of music catalogs, movie rights, or trademark assets. And once you win an auction, those steady quarterly royalty checks are legally wired directly into your bank account. Finally, number 5. The wealth blueprint: stop trading hours for dollars. Ultimately, the difference between the wealthy and the middle class comes down to one simple thing. The middle class buys liabilities disguised as assets, while the wealthy buy cash cows that are hidden right in plain sight. If you really want to stop trading your hours for dollars, the path is clear. The only question left is, which of these hidden asset classes are you going to start researching deeply today to build your own institutional wealth blueprint?